Hey traders, Raghee here. I think everyone's in the house. All right, let's get a quick audio and video check in. Should be good to go. Awesome. All right. Happy Wednesday, everybody. I don't know about you, but when we have a Monday bank holiday, I lose track of the days. All of a sudden, this really feels like a Tuesday. All right. But what we do know today is we have a lot of FOMC speak. Waller just finished making a lot of pretty dovish comments. So comments that would be perceived as opening the door to the rate cuts that frankly are already, it's good to hear the confirmation, but they're already priced in for the next meeting. So this is the September 17 expectation. It is almost 92% expectation that the Federal Reserve is going to cut at this meeting coming up in basically 2 weeks, right? You can see that there. So when you're looking at this particular chart, this is the Chicago Mercantile. They have this cool way of showing us what the Fed fund futures are showing us. So just like there's futures for gold and S&P, there's futures for the Fed funds expectations. And it is a 1/4 point cut that is expected, not the hold, gang. That's a measly 8.2%. So if someone says there's a chance they can hold, well, there's a chance I could fly, right? That's really where we're at. So it is absolutely priced in. In fact, anything that is above 80% is in fact priced in. Now, this is where it gets even more interesting. At 10 a.m. today, you can see here in the notes, right? At 10 a.m., we've got the jolts. So you can see here at the top of the hour, we've got the job openings. I forget what L&T stand for. It's an acronym, but we got the job openings coming up. I can tell you right now, because that's gonna make me crazy. All right, what is this thing? Number of jobs. So the number of job openings during the reported month, excluding the farming industry, but I know there we go. Here's the acronym. It's job openings and labor turnover survey. Job openings, labor turnover survey. That is your acronym there. That's coming up at 10. Now, while not as important as the non-farm payroll on Friday, definitely it's going to be a factor. I consider JOLTS the number 2 employment metric. Number 1 is non-farm. Number 2 is the job openings labor turnover survey. And number 3 is, for me, the weekly unemployment claims. So as long as the Federal Reserve has now put the employment picture in focus, this rate cut's kind of a big deal. Now, does it mean the equity markets go straight up? No, but it does mean that we expect lower rates. That typically lowers yields, that typically weakens the dollar. These are all perfectly normal things within a typical cycle of any central bank, the US one, the European one, whoever, of any central bank cutting rates. Now, the anticipation of rates is far more bullish to the underlying stock market than the rate cut itself. So as we're waiting on them, this is very buy the rumor, sell the news. That's pretty normal. So we would expect, as we're in that rate cutting cycle, the dovish cycle, we would look for the equity markets to benefit from that some. And it's not the only narrative, but the only macro that does matter is the Federal Reserve. And underneath that are the different metrics they look at, right? And they've already said, look, we're looking at right now in order, I'd have to say inflation's dropped maybe to number 3. So number 1 is labor. I'd say growth is kind of sandwiched in there now, and then inflation. Because some of the comments from Waller, for example, we know we'll have a blip of inflation, but it won't be permanent. And 6 months out, will be closer to 2%. Now, of course, this is his opinion. Nobody knows it's going to happen, right? But this is, not the head of the FOMC, but definitely a member saying we should cut at the next meeting, but we don't have to cut at every meeting. So I would not necessarily expect successive cuts, but September is absolutely in play. All right, so pre-market, what do we got? Well, there's a nice inside candle. It's a traditional Japanese stick candle. I think a lot of folks are pretty familiar with. So all an inside candle is if you've got this big candle right here that we had yesterday, what a huge candle this was from top to bottom, right? Today's candle is inside that range. Kind of hard not to be. That candle was enormous, but that is an inside candle. So as long as it remains below the high and above the low, it's inside yesterday's range. Those of you that were or are Japanese candlestick fans, I use a Japanese candlestick shape because it's just easier for these nearsighted eyes to see over a bar chart. I don't know that anyone uses bar charts anymore. There's just a bigger, more visible footprint for these kinds of candles. I don't use Japanese candlestick patterns, although this is also known as a harami, which I think basically means pregnant. So it kind of looks like a pregnant candle. Mom, I'm on camera. Thanks, Mom. My mom's, hey, Mom. Yeah, I'm on camera. I don't know. We'll see what it looks like on YouTube. Okay. So if we take a look at what's going on, I might have to edit this one. All right. Everyone says, hi, Mom. Yep. She came in her dress. All right. So if we take a look at what's going on with the, if we take a look what's going on with what's that inside candle, that being inside that range is probably not the biggest story here today. But what it does signal is a pause, right? We're not making lower lows, but we're not making higher highs either. Everyone's taking a breath and they're just waiting for the next catalyst to happen, right? Okay. So ultimately, those are the kinds of things that we can glean from the daily time frame, but from the 5-minute time frame, where I'll be looking for day trades, what the overall thought is here is that if I'm looking at the day trades today, the idea here would be what's the structure on the 5-minute time frame, and we may or may not get any setups. We'll see, but I can see that we're just above the previous session close. So you'll see that as PSC on my notes. I over pepperminted myself today. Anyone ever do that? I haven't been doing caffeine. My eyes are watering a little bit bit too much peppermint in the office here today. Tell you what, though, the peppermint will wake you up. Yeah, if you're looking to get off caffeine every now and then, I've been doing a little bit more green tea, but that peppermint, wow, it will bring a tear to your eye. All right. So taking a look at where we are right now, we're above the previous session close, the PSC. We are also on gold and bonds. Wow. Okay. So that sell-off in bonds has definitely slowed down as well. So that initial arguably overreaction. Now, we never know it's an overreaction. But if there was anything to do on a day like that, it is looking for the long side. I think the biggest mistake that a trader can make after a down day in a generally bullish environment, we know because our top tier candles remain green, right? This got heavy. It got neutral. My favorite actually was the Dow in terms of yesterday's reaction. I thought the Dow held up really well considering the selling onslaught. So we're not out of the woods yet on the Dow, but that's definitely something that I'll be looking at for potential swings in those sectors that are heavily weighted in the Dow. So financials, healthcare, energy, industrials, maybe transport. So we'll be taking a look at that later on today. Do Fed cuts signal a panic? No, not at all. No, not at all. There are cuts in the past that we've seen are a reaction to an event, whether that be 2019 Q1, where the Fed was expected to pause the rate hikes and hiked instead and sent the markets down lower. The cut was then a reaction to what they should have done, which was pause, and it was a self-correction. The cuts in 2020, obviously, we know that was the pandemic, but remember, gang, these are all cycles. So I don't look at hikes and cuts other than there's a cycle that the Federal Reserve goes through. They're either trying to cool off an economy or change a different metrics by increasing borrowing costs, or if borrowing costs are high enough, they're going to lower borrowing costs again in an effort to adjust those metrics that are part of their mandate, their job, right? Their job right now is to bring inflation to about 2% while not breaking the employment picture. So no, I don't always look at cuts as a panic, not at all. But some obviously are quick corrections to external forces like the pandemic in 2020. All right, so that is where we sit. I'll be looking for some day trades. And by the way, gang, admittedly, we've been pretty quiet on the swing trading front. 3-day weekend, end of month, low volume as we wrapped up August. I'm glad to have been flat going into that Tuesday session, not because I could foretell the weakness, but we know a lot of shenanigans can happen at the end of month in low volume and over a 3-day weekend. And the flip side of that is, and this is often going to be the case for us traders, which is sometimes what we'll see is when the swing trading is either something that we don't like because of the lack of volume or the volatility or just the lack of setups, right? In a general way. One of the things that I find sometimes is that the day trading picks up or that the long-term account growth trading picks up. So one of those different time horizons, one of those different types of time frames is going to have opportunity. And the day trading's been pretty darn good. A lot of you grabbed that setup we took with the weakness in the morning with the SPY and the QQQ. Not a bad morning. So we'll be looking for day trades between now, the bell is rung, and about 10:25, 10:30. And then that's going to put us in the sweet spot for day trading. For me, my best day trades, when I study all my trades over time, my best day trades come from when I have a setup that triggers usually by about 10:15, 10:20. And then by 10:30, if I have anything open, I'll manage that, but I'll stop putting in new entries at about 10:30, 10:35. That's what we call pencils down. So we close the book on the day trading, manage what's open, and that frees us up, quite literally frees our minds up and our eyes up to look for swing trades. And then we shift to the 1 hour, we shift to the daily time frame, and we look for things that rather than holding for a few hours or just today, we would then hold for 2 days, 3 days, 10 days, maybe a couple weeks. So we take those positions, those swing trade positions overnight based on what we see on a 1 hour or a daily time frame. I don't think it makes a lot of sense to try to do both. It's pretty difficult. And ideally, we wait for the first hour of the day to happen. Let the opening range settle itself down. Let the direction for the morning sort itself out. And then we start looking for those swings. Now, I'm going to keep these open, the daily and the 1 hour, a little bit more visibly than normal because there might be an opportunity after the opening range to take some swings because of the kind of volatility that we're getting and the proximity to some levels, whether they be DARVIS, the automated support and resistance, whether they be DPMR, which is the automated volatility-based support and resistance, or maybe a mean reversion, which we use the wave for. All right, so let's see what else we have going on. All right, let's see here. Yeah, everyone says, hi, Mom. Mom did not know that I'm on camera somewhere. So that could have gone really bad. All right, yeah. I'll have to check the replay just to see. Yeah, she's not used to that. All right. Fortunately, it was PG. Yeah, I hope it was. We'll find out. We'll see how PG it was. All right, so let's get to it. The first 5 minutes, look, notice I'm not slinging trades in the first 5 minutes. Let's let that opening candle, go by and see what ultimately Dow, Nas, S&P, and Russell do. Now, here's something interesting right off the bat. I'll show you something. NASDAQ. Dow's heading higher. NASDAQ's heading lower. So right away here at 9:35, we have the YM up, the NQ down, and that means avoid ES, right? So that's the first thing I can filter. That's the first thing I'm going to filter out, because if the Dow's up and the Nas is heavy, they're going in opposite directions, and the ES gets caught up in that tug of war between them. So until we get some alignment, either the Nas and the Dow going up, or the Nas and the Dow going down, avoid the ES. Russell is moving higher. And remember, Russell can absolutely do its own thing. It's not weighted with the same kind of stocks. It's not in any way going to move necessarily based on the kind of stocks that are in the S&P, NASDAQ, Dow. Russell is 2,000 stocks, not high concentration weighted, right? 2,000 stocks, not high concentration weighted. And it's not going to move necessarily because of the Mag 7 or the Awesome 8. It's not going to move because of big banks and healthcare. These are small cap stocks that are usually weighted about 2% or less throughout this extremely large index. All right, so Russell's moving higher. That means I would probably want to take a look at KRE. Now, it's not enough just to move higher. What we'd like to see is that it's moving higher and it's above the previous session close. So you can see here, I've got the KRE also above the previous session close. But then I'm going to ask myself, I'm going to keep an eye on Russell. I'm going to keep an eye on KRE. They are strong. So I'm looking for pullbacks. But the other thing I'm looking for is, what are our core setups? I'm not bouncing around between 2 and 3 and 4 different setups, not by any stretch, right? What I'm looking for is an opportunity to take advantage of one of 3 things. One, if there's a trend, which you can see here, the KRE is trying to form a trend right down in here. Those 2 green segments on the lower row, that's the trend read. That's starting to show that there's a potential trend, which means then the wave will begin to appear. Cool. All right, so then that becomes one strategy I could use. If I form a Darvis somewhere between these highs and lows, again, it's all automated, so I'm just waiting to see what appears. We have this older Darvis here, but that's not really going to be too helpful because I've got to buy then down at the very lower end, and that overlaps with the hourly price movement range. So either I can have a wave, I can have a Darvis, or I can have an hourly price movement range. Again, everything's automated. So now I'm just waiting to see which one sets up. Now, in the meantime, I mentioned the NASDAQ's heading lower. Let me show you that. There. Okay, if I'm taking a look at the NAS, this was what I was talking about. So look at where the NASDAQ's heading now. Getting down below this level right here, that's a shift from maybe support, right, to some weakness. And I would not be surprised if we continue to have some battles occurring right there around 23,380, because that's that previous session close. So when I refer to that PSC, rather than saying previous session close a million times, that's the previous session close, which is your cash close, yesterday's cash close. Being above that is bullish. Being below that is bearish. So someone's going to say, hey, we're lower than we were yesterday at the close. That's a bearish sentiment. Hey, we're above where we were yesterday at the close. That's going to, again, shift sentiment. So I would not expect a clean break, but rather a battle at that level. But be aware, NAS is kind of heavy. Okay. And Dow is strong. Russell is stronger. Then look at the poor ES. It doesn't know where to go. It's like peer pressure. It doesn't even know what it needs to do. Right? It's trying to climb kind of like the Dow, but it's doing so in a much more hesitant way because the NAS is moving lower. So see, it's kind of stuck. It's not as strong as a Dow, not as weak as the NAS, which makes it really difficult to want to trade it. Now, if there is a trade to be had on the ES, let me give you a level here. it's going to be just above 64.44. There's a Darvis level support. That could be interesting if we have an oversold signal, right? I'd like to see an oversold reading or an oversold signal. That would be ideal. In fact, that's what we did yesterday to buy the puts in QQQ and SPY. We waited for the oversold signal and the price level to dovetail. So that's something we'll keep an eye on as well. All right, so it makes a lot of sense to start at the top of the food chain. Every morning, I'm going to take a look at those broader averages, and then we're going to look to see where there might be some standouts in terms of sectors. And right now, we have an uptrend in communications, consumer discretionary. Interestingly enough, of the NASDAQ, those are the two best sectors right now. You might remember that from our watch list building session yesterday. What else is moving higher? Transports, regional banks, like we talked about earlier, metals and mining. We might have to go take a look at that. And because there does generally seem to be strength in the broader averages, not a lot of it, but all but the Dow are above the previous session close, and the Dow's barely below it. There's a little bit more risk appetite, as they say. That just means traders are willing to buy stocks to the upside. And usually that means less need for things like XLP or XLU. And in this case, XLP is in a downtrend, right? So not really looking at staples. Folks aren't that scared that they're off buying. As I say, what's staples? It's the toilet paper, right? What are the things we absolutely positively need? Think of what's in staples: Procter and Gamble, Costco, Walmart. So it's kind of the whole idea of, well, it doesn't matter what the economy's doing. I'm going to still need the goods from these companies, or I'm going to go shopping at those stores. Coke is a staple, go figure. But there it is. So those are things that we're not going to be surprised are not attracting buyers. And by the way, they haven't been strong in a bit. Take a look at this daily time frame. Look at all those red candles. This is not a place we want to be looking anyways. It's on a relative outperforming sector, period. Right. So if there is a trade to be had in staples, it's going to be maybe Staples, Procter and Gamble, Coke, Walmart. One of those would be a bearish setup, though. Okay, so that is where we are here this morning, and that is what we're going to look at. I like the long side. We're going to look for a long position setup, and I'll tell you what. Looking at the NAS as we wrap up our sort of pre-morning prep, is this could be interesting. We're getting pretty close. I don't love it because I really would prefer a Darvis here. But this is looking pretty interesting, maybe in a neutral environment with bearish momentum. That could be interesting to watch if traders are going to support that level. Please remember, in 18 minutes, 17 minutes now, we have the jolts, big data. So if I don't get it set up by 9:50, I'm going to wait until after jolts. Okay, and that's where we are as we wrap up our prep. All right, so moving on.